Good evening from outside the New York Stock Exchange on Wall Street. Everything, everywhere, all at once, you might say. From mayhem in the markets to chaos in global security, this is what 2.5 months of Trump the sequel have created so far. A day of turmoil which started with double-digit falls in Asia spread rapidly to European markets, and then here. Since Trump displayed his tariff card in front of an astonished world last week, we've seen some of the worst losses since the crash of 2008. This evening, President Trump has threatened China with a further 50% of tariffs. He's meeting Israel's Netanyahu this evening as well, but so far no sign of a tariff deal for Israel or indeed anyone else. Tonight we are live in Washington, Paris and London.
And good evening from Leeds. Don't panic. Amid the chaos, the Prime Minister is still urging calm. The government relaxes electric car sales targets in response to Trump's tariffs, amid growing questions about whether it should be doing more.
This is a moment for cool heads. Nobody wins from a trade war.
But fear of being among the losers is stalking businesses around the country, not even sure what they can do to mitigate the damage.
There's chaos that you can't navigate because even if you make a plan, if you restructure your entire business, tomorrow all the tariffs could change.
Well, so far there's no sign that President Trump is backing away from his tariff policy. For him, it has been an article of faith for decades. And today he threatened China with an additional 50% of tariffs after it retaliated last Friday with 35% against US products. This is what the spiral of a global trade war looks like, with devastating consequences for millions of people around the world. The day began with what was described as a bloodbath on Asian markets. European markets then mirrored those losses, and for the third day running since the sweeping tariffs were announced, US markets plunged on opening. Then reports of a 90-day pause in the tariffs sent stocks up again, briefly, before the White House dismissed them as fake news, sending them tumbling down again. Here's our economics correspondent, Helia Ibrahimi, on another day of markets plummeting in Trump's crash.
Carnage on Wall Street. Behind the cheers, $10 trillion of losses and counting. As Trump's tariffs destabilize markets across the globe, pushing the fear index higher. The Hang Seng had its worst fall since the financial collapse of 2008. The German DAX opened 10% down. In the UK, markets and companies all in the red. But President Trump was undeterred.
I don't want anything to go down, but sometimes you have to take medicine to fix something. And we have such a horrible, we have been treated so badly by other countries.
On Truth Social, he denied there was any risk of inflation and told his followers to celebrate oil prices coming down.
And eventually it's going to straighten out and our country will be solid and strong again.
But the numbers tell a different story. Today, the S&P 500 entered bear market territory. That means a 20% slide from its peak, which puts it close to history's largest crashes. In 1987, Black Monday wiped 28% off shares. COVID saw 34% of values slashed, and Lehman's bankruptcy led to a 57% purge.
Well, so far, so bad. And I think one thing that people are wondering about is for how long can Donald Trump persist with these policies if it turns out that they're doing a lot of damage, in particular to stock markets.
I want to cut you off because we're seeing some pretty dramatic action in the market right now. The Nasdaq is now positive.
At one point today, there were hopes that he would stay his hand when there was a rumor of rapprochement, which sparked wild gyrations on trading floors.
And there must have been a tweet.
But rumor is all it turned out to be.
There was a euphoria and a degree of complacency in the market, which means that when you got some volatility, it took a lot of people by surprise. It kind of overreacted in a sense to
Whiplash, basically.
Yeah. Trump has his vision of what tariffs need to achieve. He certainly will not row back from his core plan, which is really to rebalance the world order, to isolate China and restore America and its defensive and economic power.
But as trillions in wealth were scattered to the winds, the titans of Wall Street pleaded with the president to change course. Jamie Dimon, the boss of JP Morgan, warned of recession, while Trump donor and America's biggest hedge funder, Bill Ackman, said the trade policy risked an economic nuclear winter. But the biggest showdown may end up not being with China or financiers, but with the US Federal Reserve and the man in charge, who's not yet bending to Trump's will.
Higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters.
Jerome Powell, the chair of the Fed, hasn't always done what Trump has demanded of him. There's no doubt that the executive, in the form of Trump and the White House, would like the Federal Reserve to be slightly more accountable to the executive than we've seen in many a year. In other words, it's a different kind of central bank independence.
Accountable or not independent anymore?
It's a slippery slope between accountability and not being independent. But I think also investors are beginning to wonder about how the new world order will function. You know, the US being the leader of the free world, leader of globalization for many decades, suddenly walking away from all these commitments, and people trying to work out, well, if the US is walking away, first of all, who's in charge? If the US isn't in charge, is it Europe, is it China, is it someone else? And if no one's in charge, do you then have a rather more chaotic situation?
Is President Trump the biggest destroyer of value history has ever known?
He certainly will be held responsible for some of what has happened over the course of the last 2 or 3 days. I'm sure he would argue that this is sort of what you might describe as growing pains. But at the moment, as we speak, this is a very discouraging set of events.
So how will this end? Market crash or capitulation? Certainly today, the president was threatening even higher punitive tariffs against China. And as shares whipsaw, the ultimate price will be paid in higher inflation and fewer jobs, medicine not many people will enjoy.
And here in the US, that market chaos has had Trump loyalists from the world of business criticizing the president's plan. But Trump himself carried on as if it was all business as usual. He welcomed the baseball World Series winners, the LA Dodgers, to the White House. Our Washington correspondent, Siobhan Kennedy, has the very latest.
Never mind that more than $5 trillion has been wiped off America's stock markets, and warnings of a global recession are coming thick and fast. Donald Trump, seemingly unperturbed, welcomed the LA Dodgers to the White House this morning and was all smiles alongside the champion team.
Another rough day for the markets. The sell-off is getting worse this morning post-tariffs.
But behind the scenes, there was more market mayhem as the S&P 500 briefly entered bear market territory, where stocks are down more than 20% from a recent high. At one point, the market dramatically came back, flipping from red to green, as rumors swirled that President Trump was about to announce a 90-day pause on his tariff plan. But they quickly whipsawed back into the red after the White House denied the rumors.
Spoke to Caroline Leavitt, the White House press secretary, on the phone, and she tells me it is quote-unquote fake news that the White House is considering a 90-day pause.
If anything, the president was doubling down, threatening in a social media post to increase China's tariff to 50% if Beijing didn't withdraw its retaliatory 34% tariff on America by tomorrow. The market chaos came after the billionaire financier and Trump backer Bill Ackman became the first to publicly warn the president that his colossal tariffs could be a colossal mistake. The president has an opportunity to call a 90-day timeout, negotiate and resolve unfair asymmetric tariff deals, and induce trillions of dollars of new investment in our country. Alternatively, we are heading for a self-induced economic nuclear winter, and we should start hunkering down. One of Trump's economic advisors was asked about the proposed tariff pause today and said this in response, which appears to have caused the brief market surge.
You know, I think that the president is going to decide what the president's going to decide. As to the idea that it's going to be a nuclear winter or something like that is completely irresponsible rhetoric.
But other prominent business leaders have also spoken out, including Jamie Dimon, the influential chief executive of JP Morgan Chase, who warned in a letter to shareholders that the tariffs would raise inflation and cause a global economic downturn, perhaps even a recession. And even Trump's top cheerleader, Elon Musk, parted ways with the president as he too publicly called for the tariff war to end.
I'm hopeful that there can be a very close relationship with America and Europe. I'm hopeful, for example, with the tariffs, that at the end of the day, I hope it is agreed that both Europe and the United States should move, ideally, in my view, to a zero tariff situation, effectively creating a free trade zone.
We'll use the word collapse.
One look at Tesla's stock will tell you why Musk is keen for all this pain to go away and for exports of cars and car parts to continue tariff-free. But the White House insists the president is standing firm, determined to address what they believe is a massive trade imbalance between the US and the rest of the world that's left America with a huge deficit. And yet, Trump, at the same time, is also openly saying that negotiations with those countries, bar China, which have requested meetings, will begin taking place immediately.
It's been total whipsaw, especially for the Mag 7 this morning.
No wonder the markets are confused. They hate uncertainty, and Trump's tariff blitz is giving them exactly that in bucket loads. Case in point, Israel's Prime Minister Benjamin Netanyahu arrived in Washington, D.C. last night and has already held talks with the White House Commerce Secretary over Israel's 17% tariff. He, like the rest of the world, is presumably about to try and bring that levy down to zero. But unlike the rest of the world, he's got an audience with the president himself to make his case in person.
Siobhan Kennedy reporting there. Well, let's discuss some of the issues raised by these pieces. I'm joined now by Sam Nunberg, who was a campaign aide to President Trump during his 2016 campaign. He joins us from Florida. And Professor Betsy Stevenson is an economist at the University of Michigan and was an advisor to President Barack Obama. Welcome to you both. Let me start with you, Sam Nunberg. Even some of President Trump's closest allies and friends, many of them billionaires and hedge fund managers, were criticizing him ever so politely on social media last night and this morning, saying he'd gone too far, that these tariffs were, a sledgehammer on the world economy and world trade. Do you agree with them?
Well, certainly the markets are reacting negatively to this, but I think that from my friends in the White House, I was told that they expected that there would be losses. The greater issue to them is whether or not there could be parity on the world stage and to create a stronger American market and a stronger American workplace. That is their view. The president has been consistent on this from as early as 1978. You can watch an interview. He does not look at free trade in a vacuum. He looks at it as a relationship with our allies, where if we are providing protection, if we are providing other services and guarantees, we should also be able to have free access to the markets. He does not believe that trade deficits are beneficial. He never has. And our party has changed with him on this. So I suspect that while the financial world will continue to criticize him, and that's their job, that's their concern, his longer concerns are the people like the UAW who supports him, American manufacturers, American workers, and that's where he is looking.
But one of the reasons why America has been such a successful nation, even though there have been some losers in the process, is that it has fostered free trade as much as it can around the world. Lots of people, not just in this country, but also elsewhere, have got a lot richer as a result. He is in danger of destroying that entire system, isn't he?
Well, I don't know if he's in danger of destroying the entire system. The one thing I would say is we do have a proof of concept of this during his first term. I remember being told by many, and I remember being told by many of my clients, can you please talk to the White House about these tariffs they were putting on China? I was told that I was given numbers by them, projections by banks, that these inflations would be upwards of 3 to 4%. What ended up being was around 0.6%. The one thing I would say about corporations themselves is that they have a capacity to be able to handle these negative effects. Part of the problem is, and this is a longer issue, and you mentioned in your segment with China, let me finish with this. Part of it is that they have put us, these American corporations have put us in this position with China because they were willing to take these terrible deals to enter the Chinese marketplace, such as giving away 50% of taxes and giving away their intellectual properties. And I think that the larger concern is China here. The UK will make a deal with the United States.
Right. Professor Stevenson, Sam Nomberg has a point, doesn't he? On one hand, yes, American corporations have got a lot richer. The Chinese have done incredibly well out of the system. But a lot of people, who Trump promised things to on the campaign trail, they've been losing out. And, their time has come.
I don't think this is how they're going to get their time. I am here in Michigan, and I'm looking at the auto industry. They're not backing this. This is actually very harmful for the U.S. auto industry, because what we're seeing is not targeted tariffs that are trying to help support certain aspects of American industry. This is across-the-board tariffs. You can't build a car without importing rubber. So it doesn't help us to put tariffs on every single import. I do not think it's a China fight at this point. When you're looking at what the markets are saying, this isn't about some finance guy or someone who thinks, about just money. They're actually telling us something. They're telling us that the net present value of sales for the entire future expectation of those companies is now lower. It's not lower because they expect profit rates to change. It's lower because they expect the quantity sold to go down. We are going to consume less because prices are going to be a lot higher. And I don't think that very many of the things that we're going to be paying a lot more for are going to end up being manufactured in the United States. We are not going, we import 97% of garments. Has he been trying to say we're going to bring back the garment industry? American workers don't want that. We were using mostly immigrant labor in the garment industry before it started to exit. So we're not going to bring those jobs back. We're just going to pay more for our Nikes and our shirts.
Sam Nomberg, doesn't Betsy have a point there?
Well, Betsy does have a point, because what the president has done here is he's used a blunt instrument, and he's done across-the-board tariffs. What I suspect is because, as Betsy mentioned, that the idea of a target, he is not interested in negotiations or targets anymore. Despite what he may say in jest, he knows he has a limited time left in office, and he's here to try to negotiate deals as fast as possible. He does not want delays. And if you are going to put these wide tariffs on our partners now, they will come to the table. I would also point to that the EU president has said, well, let's do 0 for 0. That sounds fine to me. On the other hand, too, what we also have to realize is that the president has been very, very clear about the point that they're going to be aligned with spending in NATO. And I suspect that, for instance, if Prime Minister Keir Starmer were to come to the White House, he should also be promising to raise that defense spending for the UK. I would advise that.
Betsy Stevenson, even if there's some kind of delay to the tariffs deadline, which some people have suggested, even if the hedge fund, billionaire bros, friends around Trump get together and say enough is enough, we're losing too much money here, do you think that fundamental trust in the American system has been lost as a result of this last week?
I worry a lot about that. I think that President Trump has forgotten that we are big. We are a big country, but we're still only about a quarter of the world's GDP. And so if we want to isolate ourselves and leave the 75% of the world's GDP and even more of the world's customers out there to organize amongst themselves, you can shrink the U.S. going forward. I do not think this is a plan to return the United States to its glory days. I actually think it's a plan to diminish the United States in world standing. I do agree that what he wants is the U.S. to play a smaller role in the globe, and that this is not about negotiating tariffs. Look, he put a 46% tariff on Vietnam. Vietnam has a 1.5% tariff on goods to the United States. So he's not trying to bludgeon that 1.5% with a 46% tariff. I think partially it's not a well-organized plan. There's not a plan for executing it, and it's clear that he wants something besides getting that 0 for 0 tariff because these tariffs did not match what other countries were charging us.
Okay, we're going to leave it there. Professor Betsy Stevenson, Sam Nomberg, thank you very much to both of you. There will be more from us here in New York later in the programme, but let's go to Jackie in Leeds for UK reaction. Jackie.
Thanks, Matt. Now, Sir Keir has responded to the economic turmoil, reducing the pressure on car makers to hit zero emissions targets. They will now be allowed to make hybrid cars for another 10 years, instead of being forced to make a rapid switch to purely electric vehicles. In a speech to workers at the Jaguar Land Rover plant in the West Midlands, the Prime Minister said he would rebuild the country's industrial strength in defiance of a volatile world. Our political editor Gary Gibbon reports.
Hello there. How are you? The Prime Minister rushed to the car manufacturer thought to be most at risk from US tariffs on UK car exports, Jaguar Land Rover. And he brought the TV cameras with him.
Can you be careful of the cars? Can you move away from the cars?
His message: we will get you through this storm. There was a reminder of the government's own difficulties as the Jaguar Land Rover boss talked of eliminating debt, and the microphones caught the Chancellor whispering to the Prime Minister, that'd be nice.
We've also eliminated all of our net debt. That was £5 billion just 31 months ago. That'd be nice. This company...
The Prime Minister nodded sternly and promised the government would not stand by.
Well, these are challenging times, but we have chosen to come here because we are going to back you to the hilt.
As markets crashed around the world, Keir Starmer suggested Donald Trump's giant new tariff wall was intended as a permanent structure and not going to be negotiated away.
This is a changing and completely new world, an era where old assumptions, which we've long taken for granted, simply don't apply any longer.
The Prime Minister insisted the mayhem in the markets would not mean he would go back on his election pledges, personal taxation. His solutions: more deregulation, normally associated with the political right.
The first lever can't be more taxes. My strong belief is that we have to grow our economy, create the conditions for investment, which we have done. There's been record investment coming into our economy. Now, in the light of these challenges, we have to go further and faster in the changes we're making, whether that's to do with regulation, whether it's to do with the EV mandate, to make it more flexible so that businesses like this can thrive and meet the challenges. We have to push on into that space.
One think tank that promotes net zero transport says the government's changes on electric vehicle or EV rules means car makers like Jaguar Land Rover may now move much more slowly towards hitting government targets.
So we're seeing a really significant relaxation of the rules in favour of hybrids and away from pure electric cars.
How much were electric vehicles part of our net zero plan? What just happened overnight?
Well, they are a huge part of our net zero plan. Cars are about 15% of all emissions in the UK at the moment. Road transport, this covers vans as well, road transport is about 20%. So it's a really significant change to the net zero plans.
Keir Starmer was also asked how he would rescue British steel, also now slapped with US tariffs. And whether he would reach for the more traditional left-of-centre policy option, nationalisation.
All options are on the table in relation to Scunthorpe. Again, an example of the approach that we will take. When I talk of an active government, what I mean is a government that rolls up its sleeve, gets on the pitch.
Keir Starmer's political reflexes will be tested by the tariff crisis as the victims of Donald Trump's tariff policy call out for help.
Keir Starmer emphasising there that he feels we are moving into an era, not a moment of global economic disruption. Any idea that there's a side deal on trade to be done with America which will protect us from all these movements in markets, trying to move people away from any such notion as that. Another thing from him today, talking very much about how he's got a cool head, a pragmatic approach to all of this, but you also get a sense about, in this crisis, policy will, under Keir Starmer, move to the right sometimes, move perhaps to the left sometimes. On the right, on those rules on electric vehicle targets, what they mean, they are a very significant watering down of the staging posts towards the targets. And if you're a car manufacturer who's really not shoving many electric vehicles out the door, well, you don't actually have to shove that many more out the door. under these rules. You can put out some hybrid vehicles to make up your numbers and avoid punishment. So that's a kind of movement you could say in a rightward direction, but when it comes to British Steel, you sense very strongly that an old-fashioned lever of the left, nationalisation, is rearing into view. And Keir Starmer, who said to a political cabinet only last month he doesn't see politics as left and right, well, he's going to be potentially pushing things left and right in this crisis.
Gary, thanks very much. Gary Gibbon there. Well, a short while ago, I spoke to the Trade Secretary, Jonathan Reynolds, and I began by asking if people were right to be worried.
It's been an exceptionally challenging day. I think that is absolutely clear, and that is true all around the world. And of course, people will be worried by that. I absolutely understand that. We cannot say of events of this magnitude that we can insulate the UK entirely from them, but we can make decisions that give us, I think, the best way to navigate this challenging situation. So the kind of announcement the Prime Minister's made this morning, UK automotive sector, one of the fundamental pieces of regulation that is really important to them and the business case for making vehicles in the UK. Of course, they'll still be worried by the 25% tariff the US has imposed. It's a key export market for our vehicles, but we can make decisions in terms of the things that we can control.
People are terrified about their pensions. They're terrified about rising prices. Companies which do business with the US are terrified about their very existence going forward. People need to feel that more is being done, don't they?
No, they want things to be done, and that is what is happening. But I don't think they want catastrophising. I don't think they want rhetoric. I don't think they want an escalation of an already difficult situation. They want to see decisions made within our power. They want to know that domestic response is there, that we're preparing for that impact of goods not being dumped on the UK, and also trying to find the way through this, difficult as it is. That is an active response, but remaining calm, not threatening escalation that might not be in our interest, making sure we're making those decisions at every stage in our national interest.
But while the UK stays calm, we see President Trump talking about tariffs on China of more than 100%. Nobody seems to be listening to you on a global stage, do they?
Well, I think you see exactly why the UK's approach is the right one. You start escalating a trade war, it starts to be escalated on both sides. This is the position that you get to. You've got to make decisions in our national interest. And let's not forget, if you look at, for instance, the relationship between the UK and the US, the kind of complaints that maybe exist between other countries in the US aren't evident there. So we've got to make those decisions based on our own trading relationships. That's what we can control.
It still didn't deliver you a deal, did it? It's being reported that 50 countries are basically begging for an audience with the US. You know, the UK could be quite far behind.
Well, first of all, I would say that engaging with the US was the right thing to do. In terms of where our talks are at, I'm obviously not going to give a running commentary to understand that. But the depth of those, than nearly any other country in the world. But some of this is down to the US. Does it want to try and use this moment to do as it said it would, to improve for a fairer, more reciprocal set of trading arrangements around the world, in which case the UK-US is a good one to start with. But they've got to make decisions, and the President ultimately will decide a lot of this as to how they take this from here.
And on the point about the President, who is deciding a great deal at the moment, and you've been, you know, the UK have been extremely polite in their dealings with President Trump. Would you say he is stable, both on trade and security at the minute? Many people would look at his language, would look at how he is ratcheting up things and think maybe not.
Look, the engagement we've had with the US, with the administration, with our counterparts, difficult as this has been a level of engagement and availability, a seriousness, a depth of discussions of which I've got absolutely no complaints about.
The markets are crashing and they're talking about things being beautiful.
Well, look, this is for the US administration themselves to answer for, to respond to. We obviously can't account or speak for them in this regard. I would say if you take what has been their objective that they put forward, which is, as they would say, countries being able to have a more reciprocal level of trade with the US, what they would call a fairer relationship, well, you've got to find a way through these tariffs, if that is what you want. That is what we've been seeking to do, but I think it is important to stress the need to make, at the same time, these domestic decisions like the ones backing the car and van industry in the UK today, because without that, we'd be lacking. This is an important bilateral negotiation, multilateral negotiation, but you've got to make those decisions.
Jonathan Reynolds, thanks very much for talking to us. So what effect will Trump's tariffs have on UK businesses that trade with the United States? Most of the companies surveyed by the British Chambers of Commerce think they'll be negatively affected, and a third say they will have to put up their prices. Amelia Jen has been to visit a drink company in Kent that is having to entirely restructure its pricing.
This is a beautiful whiskey from Japan that's now going to have a 24% tariff. If you look at something like this one here coming from Scotland, that's got a 10% tariff. This one is coming from Ireland, 20% tariff. So it's literally a different tariff for every single bottle.
When Justin bought this drinks company, he had no idea it would find itself at the heart of an international trade war. He imports and exports spirits from all over the world, and his biggest growth market this year was the US. For every bottle he sends over there, he now has to factor in the tariff imposed by Trump on the country where it was made.
We have about 16,000 different bottles that are available for sale, delivery next day, and we have to go through each one of those and identify the origin to make sure that we have the correct tariff. And then we have to write software to calculate and display that tariff at the checkout so that people are being charged the right amount.
He predicts with rising prices, his sales to the US could be hit by as much as 50%.
Does it feel worse now than it did during the financial crisis?
Much more difficult because there are fewer levers to deal with. Like there was chaos then, but there was chaos that you could navigate. This is chaos being driven. This is chaos that you can't navigate because even if you make a plan, if you restructure your entire business, tomorrow all the tariffs could change. It's impossible to plan in this kind of environment. Like, businesses need stability.
In a fresh survey of UK companies, more than 60% of those with trade exposure to the US said they'll be negatively affected by these tariffs, 20% of them significantly, with a third saying they would have to put prices up. But the same survey found that 40% of UK firms thought the 10% tariff imposed by Trump wasn't as bad as they expected. As Wall Street tumbles on the high street in Dartford, there's less panic, more trepidation.
It worries me because cost of living's already been a problem for a lot of people, and I think that this potentially could make things even worse.
I'm a pensioner, get the state pension, but I've also got a private pension, which I think will probably end up going down.
I'm quite a Trump fan, and I think we're doing the right thing in waiting, not to rush and put tariffs on them.
But this electronics shop owner is worried about his costs.
We have a big market for Apple products. I don't know if it's going to affect the market there and may increase the prices. And I don't know if the users are ready to pay extra amount for the same products they're buying already.
Will we all be out of pocket then? The truth is, for now, no one can say for sure.
Whether UK consumers will be affected in the future depends on a range of things. One is whether the UK government decides to retaliate. If that's the case, then UK consumers will face higher prices for US goods. Right now, that's not the case.
So we don't really need to panic just yet?
Yeah.
Okay.
Unless the UK government retaliates.
With world leaders, including our own, scrambling for quick-fire deals or striking back with retaliatory tariffs, British business is bracing for what it doesn't yet know. Some industries, fearful of China dumping cheap exports here, want to see the government go on the defence and not just against the US. Others can't think of anything worse.
The tariffs are terrible, but it could be 10 times worse if we get into a full-blown trade war.
For now, volatility is the only known quantity down the line.
Welcome back to Wall Street. It has been a drizzly grey day here across New York City. But on Wall Street, it has been at times rather stormy. For the third trading day in a row, markets here plummeted as soon as they opened. There was that brief bump with those false rumours of a 90-day pause in the tariff programme. And in fact, the markets did then end up a little bit higher. But before all that happened, that little bit of green good news, I went on the trading floor to see the opposite. Monday morning rush hour on Wall Street in front of the stock exchange, the high citadel of capitalism that has been forced to respond to a howl so far so often ignored.
All my life, jobs leaving America. America first. Trump, he meant what he said. He said what he meant. He may be down and out, but it's his frustration, the rasp of the Rust Belt, that Trump has been channeling with his global sledgehammer tariffs. We went inside the stock exchange and ventured onto the trading floor to see whether Trump's market medicine is similar to his solution for COVID, drinking bleach.
more likely to kill the patient than the virus. This, of course, is the most iconic stock market floor on the planet, where greed and fear tussle with each other on a daily basis. Well, if you look carefully today, it is fear that is prevailing. And of course, that's reflected in the deep red numbers across the boards in every single market on the planet. The real wolf of Wall Street, it turns out, doesn't reside here on this street or in this building. He resides in the White House. There is a real crush for the exit, and no one here is in the mood to talk. It turns out, rather surprisingly, that the sound of fear is the sound of concentrated silence. Everyone here is focused on those markets, is focused on those red numbers and getting out at the right time. That's why you don't see the kind of mayhem that we expected to find. Luckily, we came across the professor of markets from Georgetown University for some context.
The only way I can explain what's going on is that Trump and his team are extreme isolationists.
Extreme isolationists,
yes,
yeah.
This has been a theme in American history going back hundreds of years, the notion that we're so big, we don't really want to be involved in those foreign entanglements. And so what Trump is doing is basically trashing 75 years of U.S. policy and telling the rest of the world to go to hell.
Trump's moves on tariffs shouldn't really have come as a surprise to anyone. Since his days as a New York real estate magnate, Mr. Trump, the self-appointed artist of the deal, had a very clear view on whether America was being treated like a loser when it came to foreign trade.
But we don't have free trade right now, because if you want to go to Japan or if you want to go to Saudi Arabia or various other countries, it's virtually impossible for an American to do business in those countries. Virtually impossible.
Mr. Trump, hello, Matt Fry. Nice to meet you. 2.5 decades later, in 2013, still refusing to confirm whether he was planning to run for president, we locked horns over global trade again.
China has been eating our lunch. China has taken the United States for a ride like nobody other than perhaps OPEC has done.
But Donald, they're not just eating your lunch, they're paying for your lunch.
No,
they are your banker, and you don't pick a fight with your banker.
You don't understand economics. China is taking advantage of this country like nobody has ever taken advantage of the United States. And you look at what's going on in this country, we are not making our product now. China and other countries are making our product.
But, I mean, we live off Chinese manufacturing, whether we like it or not.
That's because when you say we, you are stupid. You're stupid.
You called me a bad economist. I'm stupid.
Well, you're
what
not
else
a
are you
good,
going to
look,
do? Come on. I've been very
economist.
civil to
You're
you,
not
Donald.
a good economist. No, you haven't. You're not a good economist at all. You don't understand business, and you don't understand what I'm saying with China. You think it's a joke.
So I'm fired,
it's not
right?
a joke.
So I'm fired.
You're not fired. You're not
Honorable
fired.
Donald John Trump.
The billionaire bros that cheer Trump into power and serve in his cabinet may be panicking as they watch their fortunes bleed out. Why did they ever let him go this far? And can they stop him as Liberation Day has turned into Liquidation Week?
Well, with the European Union facing a 20% tariff on its goods going into the US from Wednesday, EU trade ministers have been gathering for an emergency meeting in Luxembourg. Our foreign affairs correspondent, Porrick O'Brien, joins us now from Paris. Porrick, what was their response?
Well, Jackie, the EU's approach to this sort of has a feeling of that kind of spaghetti Western scene, you know, where you've got the genteel poker game on top of the table and the cocked loaded gun underneath it. The EU Trade Commissioner came out of those meetings today and he had adopted quite a measured tone. He was talking up the trading relationship between the EU and the US. It's the largest in the world. It's enormous, valued at some $1.6 trillion, that relationship. But he also went on to lay out what's at stake if this deteriorates into a full-scale trade war.
This is kind of black day for the markets, I would say, all over the world, because I mean, we have seen the plunge in U.S. stock markets, but the same in Asia and also in Europe. So this is just, I would say, the market reaction to what I think many of my colleagues in the room described as the most important paradigm shift in global trading patterns since the Second World War.
So the EU approach very much one of sticks and carrots here, or at least veiled threats of sticks. But let's start with the carrots. What is being mooted as one way of getting Trump to meaningfully engage around these, rolling back these tariffs, is the possibility of extending tariff-free buying and selling of automobiles, for that to be extended to other industrial goods as well. That's one possible sweetener on the table. The other is they're looking at the possibility of dropping the European digital services tax. The EU buys lots of services from the US, particularly around the tech sector. So there's some of the sweeteners to get the US to try and engage around rolling back some of these tariffs. When it comes to the sticks, they're talking down that, but everybody knows what that means. It means all-out reciprocal trade war, which will cause like untold pain to economies and individuals around the world. So the EU are walking this balance, they're walking this tightrope. On the one hand, they don't want to overreact or be seen to overreact, but on the other hand, they have to make sure that Trump knows that they're willing to pull that trigger.
Warwick, thanks very much.